But stock of the day is Zip. Remember that company used to be on the 200? Not anymore. I think we call it a small cap these days. Well, so far today, shares are spiking, in fact, seeing its best day in 9 months as it's watching its revenue grow. So Zip is reporting pretty strong growth in its core US and Canadian markets. Boosted revenue from there for the first quarter rose by 35% to just over $200 million. Transaction volume jumped 11% to over $2.3 million. And this is what's really important for a lot of these unprofitable companies. It says that it expects to achieve positive EBITDA results for the second half of the financial year. So the company's shares are looking pretty good so far today. Look, I sort of put it out to you guys what you wanted the stock of the day to be. I can't say Rudi would have been thrilled about talking about Zipco.
You never know, I didn't answer.
All right, and Philip Pepe. You know, Zipco is an interesting one because, you know, shrunk. Well, the question is, did it shrink to greatness? Is there still greatness potential on its cards?
Very few companies shrink to greatness. And remember, this was the next Afterpay.
I don't know anyone. Has anyone ever shrunk to greatness?
I was being polite. You can shut down a loss-making division and focus on the profits. Look, it was a good spike, but if you look at that chart, geez, it's come off a long way back over the heydays of the buy now, pay later, when Afterpay was going through $100 or something. And
God, remember those days?
Good. When interest rates
How can you forget them?
Interest rates were zero, life was good again. We couldn't travel, but that was fun.
The hottest stocks on the stock exchange.
It was.
Oh my gosh.
Which one do you buy? It was the cryptocurrency of its generation. It's too soon. It was a good announcement. Consensus expectations were so low, it came in well above. It did well both in North America and in Australia, both in terms of value traded or value lent, I guess. Volumes were down in Australia though, it's still half their revenue. So
yeah, I was going to say, that's like core markets of the US and Canada, very much still in growth phase there. I'd say Australia is its established market still.
So Homebase is down 6% on volume, but the value was up, so if value readjusts. But the reaction today was purely beating very pessimistic expectations by analysts, and market loves an upgrade, and market loves when a loss-making cash burner turns to EBITDA positive. That tends to be when you get the re-rate. We've had that today. Would you buy today? No, because the outlook for the Aussie consumer, if you're using a Zip or an Afterpay, you are very much in the, what's the opposite of a sweet spot? Interest rates go up.
In the pain period.
Will probably hurt you. You can argue it's 20-year-olds using the payment system, but ultimately it's mum and dad who pick up the bill. If the 20-year-old can't make the payment, I'm generalising. So very good bounce off a very low base. I'm going to call it a hold. It was a good 1 quarter. Let's see them put together some back-to-back solid quarters, and let's see what happens with the Australian economy, because the major lenders who lend to more quality customers are calling it challenging 12 months ahead. I wouldn't go to I'd be careful with the regional banks. I'd be careful with the buy now, pay laters, which this still is. So I'm going to call it a hold. Great result, not a sell, obviously off the bottom, but I'm going to call it a hold.
All right, so do you see it any differently for good old Zip?
Yes, I can definitely play the opposite of the...
I'm walking out.
Because I could
Don't walk out yet.
It could
be a long program with me and Rudi.
I could repeat anything and everything that Philip just said, but the opposite view potentially is that they have been streamlining, let's call it like that, their operations. They at some point one would expect they would get into better results, which they are now. There are analysts out there who believe that this can go on for longer. So that's independent of where the cycle is. This is more about the company internally. They were in such a dire strait previously that if you start fixing things and selling off things and closing things,
cutting costs as well.
Ultimately, you come to a position where you go, ooh, we made a profit, or we are going to. They still haven't. That can go on for longer than Philip and I can forecast here. The one thing they have going for themselves, and the chart sort of shows that the share price has been absolutely annihilated. So if it hadn't rallied today, my forecast would be it will rally at some point, because that's what these stocks do, right? But then I think it sort of comes back to what type of market participant are you? And I'm more of the guy, I like to own companies that do more than the occasional rally. I like to look back in 5 or 7, 10 years time and go like, that's a good performer. That's done like something like 800-900% over that period. Not it had a few rallies and ultimately like Meyer, for example, always comes back to the same share price after a few years.
Some would say that about the index overall as well. But
You can say it about the index if you exclude the dividends as well. Yes, exactly. So it's not the type of stock I would recommend for most investors, but I can see the attraction if you are a believer in going through the rummage and finding those beaten down companies that everyone has given up on. And at some stage they will rally, and maybe if the share market in general recovers at some point, they will participate as well. But I have a problem with the sustainability of it all. So I would call it a speculative opportunity, but you have to do it with the risk appetite that you take on board. And for most investors, that includes Philip and myself, we happily move on to elsewhere and ignore whatever is happening in ZIP.
all right, so that would be for any very specky investor.